Good morning, hello and welcome to Money Control's live stream. You tune into a fresh new edition of Opening Bell with me, Lovisha Darad. And it is the final day of the trading session. And clearly, so far this week, we have seen the bears take over the Dalal Street. And yesterday, there was a bigger quantum of fall that we saw. But yes, with that, Nifty has already fallen by about 500 points this week. And now, we will be watching out whether the last day of the trade holds some respite going ahead. But yes, the headlines on the global front continue to dominate. US markets ended mixed overnight, but we have some four major developments to track so far today. That's the first is the US Supreme Court's ruling on President Trump's tariffs today and whether or not it holds. So far, the consensus has been that some of the tariffs can go, if not complete. But yes, we'll be watching out what the Supreme Court holds out on the Trump's tariffs later tonight, which is around 8 p.m. is when the ruling would be taking place. But yes, the second factor will be the US jobs data, which also will be out later tonight. Now, as per reports, the December labor data is expected to see an improvement and unemployment rate is also expected to move lower. So it's an important data to understand the rate cut path for this year itself. Last year, we have seen that the Federal Reserve had cut interest rates by about 3 times. This time, we'll be watching out whether or not there will be further rate cuts, given that the inflation has already remained quite benign in the US. But yes, the third factor being is that the US Senate has advanced a proposal that aims to limit the power of US President Donald Trump's ability to use further military action in Venezuela. So this is an important, advancement and resolution that we'll be watching out for and whether or not Senate actually goes through with it. But yes, fourth is your Marco Rubio, who is the US Secretary of the State, has also said that the US and Denmark would discuss indeed about Greenland next week. Now, what he said is that it won't be a military action, but rather a purchase agreement for Greenland. But, all of the European leaders so far, they have dissented to this move. And they've said that any of the US action in Greenland would mean an end of NATO. And so far, they have criticized any moves which has been thought out by the US itself. But yes, plenty of global headlines that we have seen, and we'll understand, how all of these cues will further shape and how all of the political tensions, geopolitical tensions, the economic data will add up to the markets itself. But for our own markets, we will also be having the December quarter results, which will be starting from next week. The 12th of January is when HCL Tech and TCS will be first reporting their third quarter results, and then it will be followed by the rest of the India Inc. So yes, we'll understand, how your trade position should be at a time like this. We'll also understand and talk to experts where the markets are headed. So don't forget to drop in your stock-related queries and we'll address them in a bit. But let's move on and take a quick check of the top headlines, Sisa. Stocks on Wall Street end mixed with Dow Jones ending 270 points higher, while Nasdaq moves lower as investors rotate out of tech stocks. Asia markets start mixed as investors assess China's inflation data. Meanwhile, the Bank Nifty is indicating a sluggish start for our own markets. Crude oil prices rebound as market reassesses supply risks against US physical balances. Gold prices remain steady as market eyes US jobs data, index readjustments. The US Senate has advanced a resolution to limit President Donald Trump's ability to conduct further attacks after the Venezuela raid. Democrats and five Republicans have voted to advance the war power resolution on 57-42 votes, 52-47 vote, and ensure a vote next week on final passage. All eyes today are on US Supreme Court as it is expected to rule on the legality of Trump's tariffs. The administration will have to issue full refunds if the Supreme Court rules against the tariffs. And in the primary markets today, Coal India's Bharat Coking Coal opens for subscription, the first main board IPO of 2026. The price band is set between 21 to 23 rupees apiece, and the company has already raised about 273 crore rupees from anchor investors. Of course, it was a deep sell-off yesterday because across the board, it was red for the Nifty 50 and, of course, for the Sensex itself. But yes, Nifty continues the fall to about the fourth consecutive trading session. And so far this week, Nifty has already declined by about 2% itself. And with that, Nifty has also slipped below some key technical supports level. It's broken below that 20 DMA and 50 DMA moving averages itself. It's near that 26,000 levels and it has seen the biggest single day fall since the month of of August. But yes, yesterday we also saw over 8 lakh crore rupees of investor wealth getting wiped out in a single session. And as I was talking about that, the selling has been broad-based given that all of the sectoral indices ended in the red. Among sectors, it was the metals that led the losses given the sector has seen a sharp rally and the Bank Nifty also came under the pressure. But yes, the heavyweights and the large caps continue to lead the declines because we did see Reliance Industries, HDFC Bank and IT majors drag the benchmark. But right now, the trade uncertainty weighs with given that the US has considered a certain proposal of about imposing 500% tariffs on any country that continues to buy the Russian crude oil. And as a result of which, we did see that some of the export-oriented names, be it your textile stocks or even the shrimp stocks, took a hit yesterday. So yes, this was how the market setup looked like yesterday. But, we'll watch out how the trading action shapes up in today's trading session. Of course, given the kind of consolidation we have seen in the past for trading session, we'll watch out if there is indeed a respite or a breather today. But yes, coming to the cash flows position of where we stand, FIIs, they were the net sellers yesterday with about 2,500 crore rupees selling in the cash markets. DIIs providing some relief by buying stocks which was worth about nearly 3,000 crore rupees in the cash markets. But yes, Nifty put call ratio that has dropped to about 0.66 levels from 0.89 levels in the previous session. Remember that we did start this week by about 1.5 PCR ratio and round we have actually slipped to about 0.66. So this actually indicates that whether or not we can see some consolidation and a rebound from these levels as of now. But yes, the stocks that continue to be a part of the F&O ban, that's your SAIL and Sammaan Capital, and none of the stocks have been removed as of now. But yes, if you take a look at the pre-open rates, that clearly points out that we could be headed for a weakish start as of now. Sensex down by about 150 points. Nifty continues to slip below that 25,900 odd levels at the pre-open trade. But let's quickly get on board with a technical expert of this show to understand how your trade position should be like. Joining me is Aamar Deo Singh of Angel One. Aamar, good morning. I mean, Nifty clearly slipped below key technical support levels yesterday. India VIX is bumped up. What levels can we watch from here on?
Very good morning. See, what we're seeing is that the benchmark indices, definitely we've seen a sell-off from the recent all-time highs, and they've been in the sell mode for, I would say, last few trading sessions. Yesterday was definitely a sharper sell-off. So more on the back of, I would say, two factors. One, as you rightly said, the Trump tariffs. That's one. Secondly, ahead of the quarterly earnings also, so there's some lightening of positions which is happening. And third, I would definitely like to add is that we're not seeing FII inflows. So that's one area which can definitely, if that starts to come back, we could, and on a consistent basis, we could see higher on the upside. If you look at the benchmark index, Nifty in specific, see some of the technical indicators on the medium term, long term, they continue to remain positive. But some of the shorter term indicators have turned, I would say, not very negative, but yes, they're clearly indicating consolidation. So on the downside, Nifty has got first crucial support somewhere around the 25,800 levels. So 25,700 levels. So 25,650, 700, that's a very important zone of support for Nifty. If that is taken up, then we could be headed towards 25,500, which would be the next major zone of support. As far as on the upside, what's happening is that any pullback is being used more of an exit opportunity or a shorting opportunity in the index per se. So on the upside, 26,100, 26,200, that's the upside that seems to be capped. And yes, a short-term top definitely seems to have been formed in the markets as far as Nifty is concerned.
Okay. Aamar, what about the Bank Nifty? I mean, yesterday it also came under selling pressure and it still remains below that 60,000 level. So from a technical perspective, how does the Bank Nifty looks like going ahead?
See, Bank Nifty is anytime better placed as compared to Nifty, no doubt about it. And that is reflected in the value of Bank Nifty as well. So Bank Nifty has marginally corrected, but still overall the trend is positive. Yes. Now it's going to be very important as to how some of the private sector banks, large private sector banks like HDFC, Axis, ICICI, they perform and how their price moves behaves in the market. So that's going to be something of interest to watch out for because the PSU banks have led the charge earlier, so which really helped the Bank Nifty apart from some of the other stocks in the private sector bank. So I would say Bank Nifty is better placed, no doubt, as far as Bank Nifty is concerned. If I look at crucial support zones for Bank Nifty. So that's somewhere around the 58,700, 59,000 zones. So it's not very far off, 500, 700 points below where we have major support for Bank Nifty. Whereas on the upside resistance, if I look at the resistance, so resistance is around the 60,000, 400, 500 zone. So it's more of a move in this with a positive bias in Bank Nifty. So if I were to look at Nifty and Bank Nifty is anytime better placed.
Okay, okay. But how does that make you feel about HDFC Bank? Because so far this week we've already seen that the index major has fallen by about 5% itself. Going ahead, can we see further fall, or can there be certain consolidation and a rebound, so to say?
See, if you look at HDFC has been really struggling. So if we go back in time and see for the last almost 7, 8 months, so the stock has not been able to hold on to its gains. So the 1,000 earlier it had made almost 1,017, 18 recently. Also the high was around 1,070. It's not able to sustain over the 1,000 level consistently. It's trying to breach that level, but it's not able to sustain. What we've seen is a very sharp correction from almost 1,000 to 950 or 945 odd levels. So if you ask me, this is yesterday's low is something which is very important. So I would say 930, 940. Currently it's around 945. Sustaining below 930, we could see it further crack. So further crack towards the 900 level. So that's the level to watch out for. I would be very careful at this 930, 940 zone, because if it bounces back, what's going to happen? It's going to be a temporary bounce back. It's not going to be a complete V-shaped recovery until unless we see something very spectacular on the result side. And some of the technical indicators from an intermediate term perspective, they also clearly point that it's more of consolidation for HDFC Bank, with 930 acting as a very strong and important level to watch out for.
All right, 930 levels is something that we need to watch out for HDFC Bank. But yes, just less than 10 seconds to go before we go to the open. But yes, I mean, coming to you, Amar, about the metal index, clearly taking a breather after days of consecutive rally that we have seen. What can we watch out from here, and anything that you're liking from the space?
See, metals, we've seen some sharp correction. Tata Steel is one stock one can keep a close watch on. It has moved up, and so now it has corrected. So it could be a buying opportunity somewhere around the 175 odd levels.
Okay, all right. Tata Steel is something that we need to watch. Yesterday also it came out with its Q3 production numbers. We'll watch out how Tata Steel behaves in today's trading session. But it has been a flat start for the markets, but indeed flat but with a positive bias for the Nifty 50. 20 points gain coming in for the benchmark index. But of course, whether or not this sustains is something that we'll be watching out for. So 25,800, that is where we are at as of now, 14 points gain. Sensex also seeing a mild startup with about 39 points gain. So it's a very quiet start for the markets. Given the kind of fall we have seen yesterday, there's a little bit of a rebound or a respite as of now. But you can see that the markets have been still on a fairly weakish note. But yes, coming to the broader end of the markets, let's take a look. Nifty mid-cap index has opened slightly in the green. If you look at the small-cap index, that is also opened flat, but with a negative bias, so to say. So both the broader end of the markets are still trying to get terms to it. Small-cap index particularly is seeing a decline of about 0.2%, so to say. I mean, the sectoral indices, Nifty IT is seeing gains of about 0.5%. On the other hand, Nifty Metal, as we were discussing, 0.2% gains coming in from there itself. PSU banks, pharma, all have opened in the green, but what is not doing well in this market is your FMCG. Nifty FMCG is seeing a decline of about 0.1%. Nifty Media Index with about 0.6% decline. Nifty Realty Index also seeing a decline of about 0.4%. Now, let's take a quick check of how the large caps look like on the Nifty 50 front, because yesterday it was just 5 stocks in the green that got settled, and 45 of the Nifty 50 stocks were settled in the red. But if you take a look at today, the picture seems to be a bit better. You can see ONGC seeing a gain of about 1%. Bharat Electronics once again doing well on the back of the order win. 1.5% gains coming in from there. Power Grid also doing well. Asian Paints, HCL Tech, Infosys, some of the other gainers on the Nifty 50. Let's take a look at the losers. ICICI Bank is seeing a little bit of a breather, given that yesterday it was still holding in the green. 1% decline coming in for the lender. Adani Ports also seeing a decline of about 0.7%. NTPC nearly 0.5% decline. Apollo Hospitals trend continues to fall. Ultratech Cement also remains one of the top Nifty 50 losers as of now. But yes, IT stocks once again seeing a little bit of a buying interest before we have the Q3 results, which will be starting from next week onwards. Aamar, let's get your view for IT pack. Of course, we have seen a little bit of a volatile moves which has come in the sector. But in the past 3 months, still, we have seen that the Nifty IT index has still managed to see some participation. What's your view and what can we watch out ahead of this Q3 earnings season?
Also, see, as far as IT
It's concerned, that's more or less consolidation right now, what you're witnessing post the rally, because it did correct from almost 39,000 plus levels to currently around 38,100 or so. So it's more of consolidation as far as the Nifty IT index is concerned. If I look at the specific stocks in the Nifty IT, is HCL Tech is now showing some signs of positive momentum. It has bounced back, so sustaining around the 1650, 1660 levels. It could rally towards 1700, 1720. So we'll have to watch out for the results. As far as Infosys is concerned, again, more or less some sort of consolidation witnessed there as well. And if I look at the other stocks like Persistent, is trying to consolidate. So it's not able to breach the 6500 level consistently. It's around the 6400 levels. So it's more of consolidation. But yes, any dip towards 6200 odd levels is a buying opportunity in Persistent. But most of the IT stocks, I would say, are clearly indicating that they could witness some sort of consolidation. And TCS is also, till the time it doesn't hold over the 3300 level, it's not going to witness any significant rally.
Okay, all right. That's the view coming in from the IT pack, and we'll be watching out how the results season pans out for the IT basket itself. But yes, let's talk about one of the top Nifty gainers today. That's your Bharat Electronics. We've seen additional order worth of 596 crore rupees, which has boosted the overall order book for Bharat Electronics, and the stock has been up by about 2% as of now. And even in the past 1 month, the stock has done well. Aamar, how do you see this going ahead? Can the trend sustain, and what are the levels that we need to watch out from here?
See, as far as Bharat Electronics is concerned, the overall longer term trend definitely remains positive for this. We've seen some consolidation, the stock correct from almost the 420, 430 levels to as a recent low of 380. And then it has bounced back towards 420, 430, 420, 425 odd levels. So I would say that it is inching towards its a crucial zone. So somewhere around 430, 440 is a zone of resistance for the stock, because that was where the all-time high was. That was around the 436 odd level. So I would say that overall the trend is positive. So the structure is also positive from a buying perspective. If you look at the volumes, that also has been significant over the last few trading sessions on specific days. So this is one stock one can look at on the buying side, but immediate resistance, as I said, 430, 440. That's the level to watch out for. If it takes that out, sustains over that level, then we could witness a sharp rally in the stock towards the 475, 480 levels. On the downside, it's very strongly supported around the 390, 400 levels.
Okay, all right. 394 levels as the support zone for Bharat Electronics as of now. But yes, let's take some of the viewer queries that is getting dropped on a live screen. We have the first query, which is coming from Anil. He's asking that he's been holding 200 shares of EMS at about 729 rupees. That's what the buying price has been. But he's seeing a bit of a loss as of now, and he's asking whether to average or sell at the current price point. Aamar, what your advice would be? I mean, the stock has been on a negative trajectory. 729 was his buying price, and right now the stock is at about 400 odd levels.
So see, if you look at the stock first from a technical perspective, so the stock has been in I would say, in a bear trend, and that has been since December of 2024. From that onwards, where it had made a high of almost 1,000, 1016. It has been correcting month on month, and made a recent low of 400, 396. Currently, it's around 400 odd levels. So overall, the trend remains negative for the stock, but it's around crucial support zone. So somewhere around the if you ask me, somewhere around the 370, 380, that's a important zone of support where it could witness some bounce back. But its earnings also, if you look at from a fundamental perspective, its September quarter results were very disappointing as compared to its previous June quarter results. So I think that also, and overall, it has not been able to display strong growth in those numbers. So I think that's what is being reflected in the price. So from the current levels, if it's able to sustain at the current levels and witness some bounce back towards 430, 440 levels, then you can say that the trend has changed. One important level to watch out for on the stock for any significant signal of trend change is 452. So if it sustains above 450, then you can say that the trend has changed. But from a shorter term perspective, longer term on the upside, it will meet with selling pressure somewhere around the 480, 500 levels. So one needs to wait and watch out how the quarterly results come out for this December quarter.
Okay, all right. 450 levels is the key level that we need to watch out for EMS as a sustenance level going ahead. All right, let's move on and take another viewer query. We have Naveen who's been asking the view on IEX on how this particular stock looks like. Of course, we've seen that the stock recently saw a breakout itself on the likely withdrawal of the market coupling norms. But yes, Aamar, coming to you, I mean, we do have the Electricity Appellate Tribunal, which will be meeting today to hear the next round of discussions on the market coupling case. I mean, how are you placed here? I mean, the stock did recently well. What can we watch out next?
Yeah. So I would say that the stock is in particular more driven as of the news. So that's where the stock, and earlier also the correction which the stock had witnessed was primarily on the back of the news, same news, so which is being heard as of now. So I would say that the stock seems to have formed a base, but it's going to be very news specific as of now. So on the upside, the stock has got some resistance around the 162 odd levels where it could meet with some pressure. Sustaining of that level, then we could witness a sharp rally. But yes, the stock seems to have formed a strong base. So until unless we see something very negative come out, the stock is most unlikely to breach its recent lows of 130, 132.
Okay, got it. All right, I mean, let's take a quick check of the markets of where we are headed right now. If you look at the Nifty, it's flat, but with a positive bias, but it looks like a very quiet day for the markets. If you look at the Nifty 50 index, still above that 25,880 mark as of now. But yes, it's a very flattish kind of markets as of now. If you look at the Nifty mid cap index, however, it's seeing some signs of recovery. 0.1% gains coming in from the mid-cap index, but the small caps continues to be the major laggard as of now because it's seeing a loss of about nearly 0.5% itself. So small caps have been under the pressure, and of course the broader end of the markets have been quite volatile so far this week, given that earlier they were helping in the initial days, they were helping the markets to recover and trim its losses from the day's lower levels. But right now in the past two trading sessions, we have seen that the broader end of the markets have also been contributing to the sell-off of the markets itself. But yes, let's take a look at India VIX, how it has been doing. 0.3% gains coming in for the India VIX as of now. It still remains near to the levels of about 11. So we did start the week with about sub 10 levels. But right now it's nearing that nearly 11 odd levels as of now. So yes, we can be seeing that the markets have been pricing in certain panic and nervousness ahead of the December quarter earnings. But yes, let's take a look at how the sectoral picture has been panning out, because so far the picture has been quite mixed. If you look at the Nifty IT index, 0.5% gains coming in there ahead of some of the results which will be rolling out as well. On the other hand, Nifty metal index has inched up into the green, 0.1% gains coming in there, and the PSU banks continues to hold well with about 0.4% gains. But let's move on and talk about one particular stock in focus, that's your RVNL. The stock has been quite flat today, but we did see that the company has secured 201 crore rupees worth of order from East Coast Railway. Aamar, the stock did see a recent breakout, but gains have fizzled out. So what is the trend that we can watch out from RVNL?
If you look at the stock, honestly, if you ask me, it has been extremely volatile in the month of December because it had made a low of almost 301 on 8th of December, and from there it had rallied towards almost 400 levels. So on 29 December, so it has been extremely volatile. So almost 30% move in a single month, and then again, if you look at almost 20% correction from the highs. So that clearly says that something is definitely happening in the particular stock and which is being witnessed. So it's more of a tussle between the bulls and the bears. If you ask me, as to the structure of the stock, it's more of consolidation because shorter term indicators are positive. Longer term indicators are clearly indicating more of consolidation. So I would say if it doesn't reach the 330 level and starts moving above the 350 level, then we could say that now again it's likely to witness an up move towards its recent highs. Otherwise, if it starts trading below 330 level, then it could witness a sharp correction.
Okay, all right. That's the view coming in for RVNL. But let's take another viewer query that has dropped on our live screen. We have Nadeem, who's been asking the view on Uniparts India, and he's saying that his buying price has been at about 530 odd levels, and he's asking whether or not to hold or sell at the current price point. Of course, he's seeing a bit of the loss. The stock recently has fizzled out, and of course, we can see in the past 1 month itself, the stock has been down by about 10%. In fact, in just the last 2 days, the stock has seen a subdued performance, and it's seen a breakdown of about 10% itself. Aamar, coming to you for Uniparts, what's your recommendation going ahead for this particular counter?
See, again, this stock really, if you see for the last a few weeks, precisely around 8 to 10 weeks, the stock has been trading in a range anywhere between 400 and 500. Earlier, the stock had corrected significantly, made a low of almost 296, and then bounced back towards 500, 540 odd levels. So we are seeing some sort of correction in the stock. More or less, it's clearly into consolidation zone. As long as it doesn't breach the 400, 420 odd levels, I don't see much of a concern there. But for any significant upside rally, the stock needs to sustain above the 470, 480 levels because the stock, since the beginning, has been correcting from almost the 650 odd levels. So the level to watch out for is 400, 420 on the downside, and on the upside 470, 480. As far as the trend is concerned, the trend, I would say, is more or less mixed in this particular stock.
All right, mixed trend for Uniparts as of now. All right, let's move on and take another viewer query. We have Anil, who's been asking the view on Bharti Airtel and how does the stock looks like and what is the entry level we can watch out for this telecom operator. Aamar, coming to you, of course, we've seen a spectacular rally in the stock, but so far this year, the stock has seen a little bit of a subdued performance. It's declined by about 2%.
Yeah, so if you look at, see, Bharti Airtel, what we are seeing is that overall, though the long-term trend remains intact, what we are seeing on the shorter-term trends is that there is some loss of momentum, and which is being reflected in the price movement also. So the stock recently in November, towards this third week of November, had made a high of almost 2170, 2180 levels, and from there it had corrected towards the 2050 again. Then it had bounced back towards the 2160, 65 odd levels. And again, it's so clearly shows that the steam or the momentum is lacking in the stock as of now. So, and some of the technical indicators from a shorter term perspective, they point towards more or less consolidation or maybe some sort of correction. Ideally, what is the level to watch out for? Somewhere around the 1980, 2000 is an important zone of support for the stock. If the stock comes around those levels and it's able to hold on those levels, then we could witness some upside. But currently, it seems that the stock is being capped between 2000 and 2200 on the upside. That's a narrow range for the stock, at least in the next coming weeks, till we see its earnings and anything that comes out of that, which could be either positive or negative.
All right, range of 2000 to 2200. That's the view for Bharti Airtel. But yes, today the stock has been flat but with a positive bias. Let's move on and take another viewer query. We have Satya, who's been asking the view on KAC International and whether it's a good time to accumulate this particular counter. Aamar, what's your view? The stock has been trending downwards. Past 5 days, the stock has already seen a decline of about over 7%.
See, the stock has been actually, if you see, the stock has been trying to form a bottom because the stock had made its highs in December of 2024. That was around 1300, 13 levels. And from there, it had corrected almost more than half. So it fell by more than 50% to make a low of 627 in April of 2025 last year. Then from there, it had bounced back to almost 940, 950 levels. Recently, it's again made a low of 668. So it's trying to form some sort of support. It's trying to form a bottom. But the fall over the last few days has been very sharp. So from almost, if you look at On 22nd of December from almost 760 levels. The stock has corrected towards 690 odd levels. So I would say that one can hold on to if one has a position. The level to watch out for is 750, 760 on the upside. That's a major zone of resistance. On the downside, it's strongly supported around the 650, 660 level. So as long as that is not taken out, I don't see much of a worry. But if you ask me from how the stock looks on the longer term charts, it's clearly in for consolidation. So if there is a pullback or a rally, that rally is unlikely to sustain in the stock unless it starts sustaining of the 780, 800 levels.
Okay, all right. That's the view for KC International. But let's move on with another viewer query. We have Varsha Gujjar who's been asking the view on Canara Bank and whether she should book losses at the current price point. Amar, what's your view? Of course, the stock has been in a consolidation range right now, and it has been oscillating between that 150 to 154 odd levels. What's your view? What does the next trend look like for you?
I would say that if you're willing to hold from a longer term perspective, you can hold on to the stock. Yes, the stock has rallied and currently is displaying some sort of consolidation. But on the downside, the stock is very strongly supported around the 140, 145 odd levels. And upside, it's 160. So 140, 160, that's a range for Canara Bank with a positive bias.
Okay, all right. That's the view for Canara Bank. Good to hold from a long-term perspective. All right, let's move on and take another viewer query. We have Samir Nayak who's been asking the view on Siemens India and Siemens Energy. He's asking whether it's a good time to buy the current counter at the current level or wait for some more time at this point of time. Siemens Energy, what's your view? Amar, how does it look like on the charts?
See, it's been in a spectacular downtrend. The stock has corrected significantly from almost 3,600 levels. Currently, it's around the 2,400 odd level. If I go back and see, in the June quarter of last year, it had made a low of 2,500, 2,508. It's trading below that level. So ideally, I would suggest is that you should wait it out and see for some wait for some consolidation. Ideally, the stock is looking at some sort of uh, uh, forming a bottom out, but that's not happening as of today. So what I would recommend that hold on to it. This don't enter at the current levels. On the downside, somewhere around 2,370, 2,400 is a level where the stock could find some support and sustaining above the 2,600 or 2,450, 2,600 level only. Then we could say that there is a trend change. It's very important that we should avoid catching a falling knife. So if the trend is very strong on the downside, you should either wait for some major consolidation before entering, because in such cases, the stock can continue to drift lower and lower for a longer period of time.
Okay, all right. That's the view for this particular counter. Let's move on to another viewer query. We have Shweta Naidu who's been asking the view on CG Power because she's bought the stock at about 684 rupees and she's asking whether is there any chance to get my buy value soon or should she shift to transformers and rectifiers? What's your view, Amar? I mean, the stock has already seen about 10% fall in the past 1 month.
Yeah, I would say CG Power overall, if you ask me, the trend is continues to remain negative for the stock on the intermediate term perspective, shorter term perspective. Yesterday, though, the volumes were significantly higher, but it's retesting the volumes. It's retesting yesterday's low as well, and because some of the technical indicators are negative. So I would say that uh, so at the current level, so somewhere around the 570 odd levels, 570, 580 is a zone of support. If one can hold on to that level, that should be fine. And if it's able to sustain over the 620, 640 level, then we could say that there is a trend change. Otherwise, the stock is in a downtrend currently.
Okay, all right, got it. That's the view for CG Power. But just one last question before we let you go, Amar. Any top picks that you want to highlight here before we head on to the earnings season?
So I would say we've been positive, as I said, on Ashok Leyland. So that's one stock one can keep a close watch on. It has been in a spectacular bull rally, and the biggest challenge is getting entry points. But this is one stock very strong technically on the longer term charts, intermediate term trend, and the momentum is also very strong. So this is one stock. Any pullback can be a buying opportunity for the stock. The stock has a potential to rally towards the 210 to 15 odd levels, and the stock has got very strong support coming around the 170, 175 zone.
Okay, all right. That's the view, and those are the top picks at this hour. But with that, we have to let you go, Aamar. But thank you so much for your time and joining us.
Thank you.
All right, let's take a quick check of the markets before we move on to our next guest of the show. Of course, it's been a flat day for the benchmark index. If you look at Sensex, down by about 145 points. Nifty has also remained down by about nearly 50 points itself, slipped below that 25,850 mark as of now. But yes, clearly the advanced decline ratio is seeing a huge gap because declines have been weighing on the markets as of now. But yes, from the sectoral perspective, it's the Nifty IT index which has been trying to buck the trend. It's up by about 0.2%. But other than that, it's the PSU banks which is holding on to the green as of now. But yes, majority of the sectoral indices have slipped into the negative territory. The worst performing sector as of now is Nifty Realty Index, which is seeing a decline of about 0.2%, nearly 2% itself. Other than that, FMCG, banks, autos, you name it, everything has been in the negative trajectory as of now. So yes, the broad end of the markets also remain in the negative territory. If you look at the Nifty Mid-Cap Index, that is also sulking in the trade. Small caps also seeing a larger cut of about nearly 1% itself. So all in all, it's once again a subdued trading session. So far this week, we've already seen that the benchmark index has been in the red. Today also, this picture looks like no different as of now. But to understand and talk more about markets, let's move on to our next guest of the show. We have Mayuresh Joshi, Director of Research at marketsmithindia.com, joining us. Mayuresh, good morning, and first of all, wishing you a very happy new year. But this week, the markets have been on a weakish side and tumultuous week because we have the geopolitical tensions, then we have the Trump's 500% tariff threats. How should one play this theme currently?
Morning, Lovisha. Morning, Lovisha. I think season's greetings and Happy New Year to you, the entire team at Money Control. Wishing this year is a very healthy, peaceful, and a prosperous one. Obviously, geopolitics is dominating the markets as we speak. The Trump rhetoric of 500% tariffs on countries importing Russian oil, the military action taken in Venezuela, the threats issued to Mexico, Greenland. I think they are not helping risk asset classes like equities as we speak. And therefore, the kind of knee-jerk reaction that we have witnessed on the market, specifically over the last couple of days, I think seems to be bracing in on what Trump might probably do. And therefore, since it's a weekend, what happens over Saturday, Sunday is something that the markets would ideally watch out for. Or otherwise, as we head into the next week as well. So yeah, I think geopolitics is something that will dominate how equity markets fashion, at least from an immediate short-term perspective.
Okay, got it. I mean, we still have the US Supreme Court's ruling on tariff legality going ahead. But do you think that that's going to improve the sentiment? Because not just the tariff report, but we also have the US jobs data, which is due.
Oh, absolutely. I think the macro data points are probably going to also remain in focus. And the ruling is probably going to be important to a certain extent. But how can Trump circumvent that? I think he's found ways and means to probably do that. But I think the bigger threat now is a combination of both these factors, right? Apart from tariffs and the circumvention that he might do, what probably happens in terms of military actions that he's expected to take. And that probably remains one of the more fearful factors as we speak for the markets.
Okay, got it. Mayuresh, I mean, we have the third quarter results, which will be beginning from next week. So what are your growth projections from the December quarter?
I think it should be strong and stable. What you've probably seen as a precursor in Q2, it was an earnings surprise for some sectors, which probably outbeat the market in terms of earnings expectation. And therefore, with Q3 coming through, I think Q3 should be relatively better placed as we speak. Therefore, I think numbers should be better off. The earnings estimates based on GST rationalization expectations in terms of the tax cuts that have probably happened for this financial year, what gets announced in the budget in terms of budgetary allocations, as well as green shoots in terms of private capex coming back. I think all of this is hinting that India Inc. should probably have a decent show in the second half and continue at that as we head into the next financial year as well. Albeit, I think what probably happens in terms of geopolitics and inflationary dynamics because of tariff impositions across the globe might just have a tad bit of an impact in terms of a few export-oriented sectors. But for core earnings growth, I think Q3 should be reasonable enough, and it should have a structural tailwind for most sectors as we head into the second half of the next financial year, which is good news for the markets, because I think the markets basically underperformed largely because of earnings not coming through. As they start coming back, and with Indian macros expected to relatively hold up as we speak compared to our emerging and developed pack, I think India has a better chance of standing out compared to the rest of the globe.
Okay. But Mayuresh, in terms of growth figures, last 2 quarters we have seen single-digit earnings growth. Do you expect this quarter to be at least, low double-digit growth, if not mid double-digit growth?
Yeah, I think that seems to be the base case scenario. I think a 10-12% growth is something that is not ruled out for this quarter. And as things structurally improve, as I said, both on the macro and the micro front, a base case scenario of a 12 to 14% earnings growth is getting pegged in for the next 6 quarters. So yeah, I think it's a good scenario that we're probably building up from low single digits heading towards low double digits and probably improving thereof as we head into the second half and the next financial year. I think that's a good risk-reward scenario as far as earnings is concerned for the Indian markets.
Okay. Mayuresh, but from a sectoral perspective, what are you watching out for December quarter? Because last quarter, clearly it was the oil and gas and metals that took the leadership. Do you expect this to remain the same, or are you seeing a change?
No, I think metals will continue, Lovisha, because you've seen base metal prices actually zoom up in the last few weeks, last few months as well. So metals will still continue having the tailwind of reasonable earnings growth. Selective BFSI should continue doing well. You've seen decent updates come through on that front. Select consumer discretionary because of the GST rationalization. And though this quarter will be a quarter where I think there will be some inventory rationalization happening as well for a lot of companies which are exposed to the GST tariffs, I think it should be a relatively better show and better commentaries as we head into Q4. Select NBFCs, the large leadership ones, should continue doing well. Infra stroke engineering, select stocks within that pack, including capital good companies, including a few cement companies, should have a reasonable show as well going forward. Large cap IT might just languish a tad bit. Mid cap might actually have a better showing as we speak. And the markets are probably looking at realty as a sector where a large part of those moves are done and numbers are probably getting imbibed as we speak when we head into Q3.
Okay. But Mayuresh, you were talking about IT sector, which is expected to report a muted quarter, but of course it's a seasonally weak quarter. But I mean, every investor had been looking at the sector because they believe that there is certain risk-reward ratio which is turned favorable towards the sector. Do you believe that even despite the muted Q3, they can watch out for a longer-term horizon in terms of valuation comfort going ahead?
So large cap IT definitely has that, Lovisha, but what probably goes through is how numbers will play out. You're absolutely right. It's a seasonally weak quarter, a lot of furloughs, lesser billing days. But commentaries also are going to be extremely important. How are they looking at the macro environment as far as the key market, that is the US market, is concerned? Has the tariff imposition caused any point of pain in terms of order wins or pricing for that matter? How do they probably balance out in terms of competing with AI platforms, which are probably shaping up across the rest of the globe as we speak? And therefore, I think a lot of things to probably ponder at. Relatively, I think mid-cap IT, though a tad bit expensive compared to the standard deviation mean averages over the last 5 years compared to large cap, have better commentary surrounding all these factors. And therefore, selectively, mid-cap IT, in my opinion, can still continue doing well, even if it's a tad bit expensive compared to the large cap IT stocks.
Okay, all right. Mid-cap IT is something that you're positive on. But amongst the metals, what are you more bullish on? Is it the ferrous names or the non-ferrous names? Because the non-ferrous names have done quite well and they have some pricing support as well. But the ferrous names could see a little bit of a margin pressure because of the rising coking coal prices. So, I mean, what does the Q3 hold? And of course, what would you choose amongst the two?
So base metals have had their run. They might continue doing well because of supply shortages that is happening and demand expected to remain stable. And therefore, proxies like a Hin Copper, Hin Zinc have done well with copper prices, zinc prices, silver prices actually moving at all-time high levels as we speak. But again, I think the safeguard duty imposition that the government imposed a few days back should also start benefiting ferrous stocks incrementally as we speak. And therefore, I think the average price realization should improve. Utilization levels should start picking up with the measures that the government has adopted, whether it's HRC, CRC, coated steel. I think the entire steel or the ferrous value chain should probably benefit to a large extent. And as these aspects start playing out, operating leverage starts getting played out on a lot of balance sheets, where EBITDA and reported EBITDA per ton should improve as we head into the next quarter. So Q3 might be reasonable because it was a recent announcement, but Q4 might be relatively better. And therefore, I think as a balancing act, I think ferrous players should probably do a tad bit better as we head into the next quarter compared to the base metals.
Okay, all right. But coming from, apart from metals, any other sectors that you're watching out for? And in terms of, because consumption was one of the sector that after the GST cut took big headlines that the second half would hold quite better. But amongst the consumption theme, anything that you're liking in a segment wise?
So FMCG is something that selectively we continue liking. Our sense is that it might be a quarter where rationalization happens for inventory, where prices need to get adjusted in Q3 on the old prices and how do they adjust that old inventory with the new inventory post GST cuts. But largely volume growth should start coming back. As volumes start coming back, a large part of the move in terms of operating cash flows should start improving, and therefore selective FMCG stocks should continue doing well. Domestic apparel makers is something that would continue doing well. As discretionary spending patterns improve across the length and breadth of the country, my own expectation is that the kind of MSP increases that one looks at in terms of cash crops, you're going to head into the budget session as well. And therefore, I think that can be incrementally positive with more discretionary spends happening from urban and semi-urban as well as rural India, aiding these players as well. And therefore, our own sense is that when you probably start looking at the bottom of the value chain and start moving higher, consumer discretionary should have a better impact in terms of the initial leg of GST rationalization, followed by consumer durables. And therefore, consumer discretionary in select subsegments might actually start catching up very, very strongly Q3, Q4 over the next few quarters as well.
Okay, got it. Mayuresh, I mean, yesterday we did see capital good names came under the limelight on the back of the reports that suggested that government might be considering, scrapping the rules about Chinese firms re-entering and bidding for the government contracts. What would you say going ahead? I mean, what kind of an earnings impact can we see if it indeed the proposal goes through, and what lies ahead?
So it will be at the end of the day competitive bidding, right? So I think our firms will be bidding competitively, even if a scenario like this shapes place. And therefore, I think it's a sentimental reaction that the stocks gave yesterday. But good leadership stocks will always have these inherent tailwinds between them, competitive bids. They probably know their entire management team, strategic teams probably know how to bid, what is the right price point, as an example, and how does it affect their overall IRRs if they bid too low or bid too high. And therefore, I think I'm not too perturbed with this piece of news. I think ultimately, I think it's going to be more strategic in nature, where I think the management teams and good leadership teams always prevail in these situations. So just reading this with a pinch of salt, not too perturbed.
Okay. Mayuresh, any sector that you remain cautious or on the sidelines for the time being?
So I think large cap IT relatively should, how the commentaries come out is something to be watched out for. Base metals, in my opinion, has done a large part of the price move. So I think being very aggressive on base metal stocks at this juncture, where a lot of stocks look extended, in our opinion, should probably be avoided. Numbers will, as I said, still be reasonable, but I think it's getting priced in to a large extent. A few of the large private banks, I think how deposit growth is expected to take place is going to be very interesting, because that is ultimately going to map the overall trajectory in terms of earnings growth on a DuPont analysis basis. And therefore, I think these three sectors is something where I would keep a close watch on in terms of how things are shaping.
Okay, all right. Those are the sectors that we need to watch out for. And of course, we'll be watching out how the Q3 season unfolds going ahead. But on that note, we have to let you go, Mayuresh. But thank you so much for your time and joining us.
Thank you so much. Always a pleasure.
All right, let's see how the markets have been faring, because so far the day has been quite dull for the benchmark index, because they have been quite flattish in the trade. Nifty still clinging on to that 25,850 mark as of now. It's seen a bit of a recovery from the day's low, but still at the flat point today. Sensex too seeing a decline of about 151 points. All in all, it's a very quiet day for the markets. No major triggers. Of course, all eyes will be on the December quarter results, and of course over the weekend itself, given how the geopolitical tensions is expected to unfold, how the US Supreme Court is going to rule on the legality of the tariffs, and of course we have the US jobs data to further amplify the action itself. But yes, for now, no major triggers. If you look at the small cap and mid cap index, both of them have been sulking in the trade. From a sectoral point of view, it has been the IT stocks which has taken a breather as of now ahead of the December quarter results. But other than that, be it your PSU, be it your realty stocks, or even auto, or even the financial names, they have been under pressure. So yes, we'll watch out how the second half of the session pans out, and whether it would be a fifth day of consecutive loss for the Nifty 50, or whether we could see a rebound from here is something that we'll be tracking as of now. But for now, we have come to an end of this edition of Opening Bell. Don't forget to tune in at 3 o'clock for closing, and we'll understand how the market is developed with our experts, which will be lined up in the show, and we'll be also discussing some of the individual stock movers of the day. But until then, signing off, and do stay tuned to moneycontrol.com.